Yo, good morning. Welcome to August 20th, 2024 live stream. And yeah, I am currently in a chess game right now, so give me a second and then I'll explain to you guys what I have in plan for today. Stronger here, I'm pretty sure. Okay, so coming into today, we expanded once again yesterday. So today I am either going to anticipate some sort of consolidation or continuation. If we can get a continuation, we have to respect these FEGs here. So we have a 10-hour, 8-hour, 6-hour, and 4-hour. But here on the daily time frame right now, notice how we could create this daily fair value gap here, and we might get we could retrace into it tomorrow if we close like this today. If we close like this on this candle right now, and these are my daily charts here. These are daily candles. So like I said, if we do get a creation of a daily fair value gap here, then I would anticipate for tomorrow to retrace into it to expand higher, attacking July 23rd high of day. That's if we get consolidation today, but we could get expansion. So it all depends on how we close here in about 33 minutes. As of right now, I would trade intraday models, because yesterday I was anticipating for today to take out previous day high, but we took out previous day high like almost as soon as market opened up at like 5. So yeah, we didn't really get any model to attack previous day high. So now I would elect to trade intraday models, and yeah, this yellow rectangle right here is a volume imbalance where there was no trading at all. So yeah, I just marked that out. That was going to be like a draw of liquidity for me. However, we already took that out, so there's not really anything else I have a draw towards besides July 23rd high of day. But we are opening up in about a minute here, so let's just watch what we do there, because that would tell me a lot. I am not anticipating for us to revisit the previous weekly high, so I don't want to see us completely get a immediate rebalance here. I want to see us leave that high intact. So this high right here, I don't want to see prices retrace all the way back down to here. If we do, then that's going to change up the entire narrative right now. But like I said before, I am anticipating for us to create a daily fair value gap today. So there is the New York Open. And we don't really have any red folder news today too, so just keep that in mind. No red folder news on Tuesday. All of our like red folder news is going to be on Wednesday, Thursday, and Friday. So just something to keep in mind. we have this 15-minute fair value gap here, and we should respect this 15-minute fair value gap if we are going to take out this 30-minute low right here. So if we can respect this 15-minute fair value gap, we should attack previous 30-minute low. School next to me is having a fire alarm practice thing right now. It's kind of loud. But yeah, like I said, prices should respect this 15-minute fair value gap. And when I say respect, we can wick outside like this right now, but if we close above it on the 15-minute time frame, that's when I would say it's a disrespect. But right now, I mean, we might be wicking above it right now, but let's wait and see how the 15-minute candle closes. Like I said, we could close down here. We could wick all the way up here and then close down here, and then still treat that as a resistance to continue lower. And yeah, like I said, I would elect to wait for the actual 15-minute closure, not these little 1-minute closures here above a 15-minute fair value gap. There's time frame alignment here. That's one of the aspects about time frame alignment, is that you should, like, a 15-minute fair value gap should be shown us, or should be showing it get disrespected, but on the 15-minute time frame. You don't want to see, or you don't want to say that we got the 15-minute fair value gap that got disrespected, but it got disrespected on the 1-minute time frame. There's that correlation isn't there. It should show disrespect on the 15-minute time frame if it's a 15-minute fair value gap. If you guys can see what I'm trying to get at. So we just retraced back inside this 30-minute fair value gap too. Here I would have treated it as a breakaway gap, but the first 30 minutes of the trading day tends to be really, like, wonky. Yeah, and this is what I mean by wonky. Look at YM trading lower, NQ and ES trading higher. That's not something that I want to see. You want to see both, or not both, but you want to see all three of the indices moving in alignment with one another. And yeah, let's just see what how we close here in the next 10 minutes. I'm gonna hop into another chess game while we're doing that. Let me go here. should go here. Okay, I didn't do that. Okay, so I go here, he takes, I take, he takes, I take. Or he could go here. He actually scoops this one up. Wait, so if I go here, he takes, I take, he takes, I take, he takes. No, I think the best move is to go here. See how this 4 hour closes. We don't really have displacement towards the downside. That's just something that you want to pay attention to. I don't think this is going to be the top of the markets. No, there's no way. I know eventually we will take out this high. It's just when is that going to happen? I go here, he takes, I take, he takes. Wait, I take, he takes, I take, he takes, I take, he takes. I don't want an isolated pawn, so I'm actually going to do this here. Oh wait, nah. If he takes this and I go here, and then I'm basically just getting free development. Okay, now free development, and then now a castle. Okay, do I castle here? Because I think he takes this. I take, and then he takes. I think I could castle. I'm gonna castle. And I'm gonna go like this. We go back here, and then here. Yeah, that's fine, right? I mean, I'm down in... This bishop's now hanging right now, so... Probably the best move. I go here and I go here. He takes, I take. Oh, that was a throw. Massive blunder. Massive blunder from the guy. I actually like this. This move here is actually pretty good. Let's just see. Like I said, I'm gonna wait until we close. Okay. Love getting my knives out. Oh, that's why he did that. Okay. Smart. I go here. I do want to develop here, but like, see if he goes here, then he still has some good rid of these two, so he'll mess up his entire castle this way. Oh. I'm gonna threaten this bishop. He takes, I take, and then I castle. We trade, and then I can just get I just castle here too. I'm not missing anything, am I? Castle here. Unless he threatens my queen with that move, then. Huh? I actually don't want it to allow that. Wait, here it takes. Oh, I just take that. I don't think there's anything wrong with that here, actually. He takes here, I take here. That's cool, right? I think that's fine. No, I still need a castle. I'm actually just gonna castle here because I don't. Yeah, I'm gonna castle and then maybe get this pawn up. He takes, I take here. see how we closing on the 30 minutes now. So we disrespected this 15-minute busy here, right? This, you can see this as a like smart money reversal. You don't have to see market structure shift to see a market reversal. You can see a disrespect of a bearish PD array, and let's say we're bullish, right? And we disrespect a bearish PD array. That means that kind of gives signs of like a market reversal, kind of, because you don't necessarily have to have a market structure shift. So I go here, he takes. Ay, ay, ay. Hold on, can I just go here? If I go here, he takes, I take. I go here, he takes, I take, he takes, I take, he takes. Okay, I think I'm actually allowed to do this, right? I'm not allowed to go here. No, it's because this pawn can just go up. If I go here, it just takes. Yeah, I think probably best decision is this. But now I have his queen pinned. So he can't necessarily trade here. Here. I go here, he takes. Oh no, I go here, he just takes here. Actually still like this. His queen is kind of just screwed. These two rooks are kind of screwed too, to be honest. See how this 4 hours closing. So this 4 hours closing is closing actually really bullish closure here. But I'm gonna mark out London highs, because I do believe London highs is going to be a draw for today if we can continue to climb higher. I actually really like this position here. I think this is gonna give me it, because he can't take this. Because if he takes this, I just take his queen. But if he goes here, then I can still. Oh. Yeah, I think I go here. I go here now. He takes, I take. Hold on, let's. So I go here. He takes, and then I take. Is there any better move here? No. I think I just go here. I get this knight to go here. I take here. And then, yeah, I think I'm, whoa. What do you, what da 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 da. What da 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 da. You can't necessarily take this. Bruh. Is he chilling actually? Oh wait, no. This. I think I go here. Okay, that was actually such. I wasted so much time there just now. This 15-minute fair value gap that we are creating here, I would treat this as a breakaway gap. And I can't go here because it's horse. I gotta go faster now. I'm actually kind of low on time. I don't think I can get this guy with it. Oh. I think this would, no. You can only go here and then. Oh my gosh. Here. Bro, I ran out of time. That sucks. It's cool. It's okay. I think I just had to go back to the charts now for real. Okay, so let's see here. Let's see. So London highs is the draw of liquidity here right now, obviously. And okay, so I don't want to see Asia take out London highs actually, because that would mean there's S&T divergence. So London high. I want to see Asia or ES leave London high still intact. If you guys take a look at the ES chart here, we are about to take out London highs, and we just did that. So longing here actually would be a little bit more how do I explain this? It would be a little bit more riskier, just because ES has already taken out London highs. And the fact that ES took out London highs will probably what to do. I mean, we still have about 2 minutes left. I'm actually not going to take this model here. There's not really an entry pattern for me to enter off of. I mean, if we can get a retracement back inside this 5-minute fair value gap, that would be considered an entry. But the fact that we had SMT between the ES and NQ right now, I probably wouldn't take the model. Yeah, I probably wouldn't do it personally. Stoic, Disney, let's do inspirational Disney quotes. Let's do one for that. One for today. Yeah, it looks like I'm not gonna be able to get an entry here. Low here was 8%. Oh, we actually went at like 0.25 of a point, a quarter of a point. A true hero isn't measured by the size of his strength, but by the strength of his heart. Don't just fly, soar. In every job that must be done, there is an element of fun. Life's not a spectator sport. If watching is all you're gonna do, then you're gonna watch your life go by. Chill. There is the 10 o'clock bell, and like I said, I'm not gonna take any of this. I'm not gonna take this model here. I mean, there's not really a model to take, to be honest. There's no entry pattern here. 4-minute, 5-minute. For me to take the trade here, I would have to see prices retrace all the way back down here, which I don't see prices doing. 2-minute, there's no FEG. 1-minute, there's a small FEG here, but I'm not gonna take that. Yeah, and I would, like I said, just purely based on how this 4-hour candle closed here, I would anticipate for us to take out London highs and that 4-hour high. So yeah, it's just, there's no entry model, and I mean, if we could, like you said, create some sort of maybe a 15-minute fair value gap, get a retracement into that 15-minute fair value gap, have a bullish reaction to the 15-minute fair value gap, then I would take the trade. But here I wouldn't necessarily risk anything here. Even though the draw liquidity is, is obvious, do you have an entry pattern, or do I have an entry pattern? No. And am I willing to risk anything? Not. actually, I'm not actually willing to risk it. Because like I said, ES took out London highs already, and where NQ is, it hasn't taken it out yet, so I'm not going to take it. And that just prevents me from taking, you know, not bad trades, but it helps me be more selective on the trade that I do take. So I'm gonna mark out the 10 o'clock open here. That just tells me where the opening price is, and there's also the midnight open here too. So we'll pay attention to that. On the 30-minute time frame, we did indeed close above this 30-minute fair value gap, however. So pay attention to that. If you don't know where you want to go, then it doesn't matter which path you take. The things that make me different are the things that make me me. It's better to use your head than break your back. You're braver than you believe in, Sean. If you don't think, you should talk. Like I said, the reason why I didn't take this 5-minute model here is because London highs has already been taken on ES, and there's SMT between the markets. I don't want to take that. Giving up is for rookies. Always let your conscience be your guide. Hey, I was thinking Pinocchio here. I give myself a very good advice. I don't know. Happiness is the richest thing Happiness is the richest thing we'll ever own. Just because it's what's done doesn't mean it's what should be done. Sometimes the right path is not the easiest one. Change is good. The only thing predictable about life is its unpredictability. Remember, you're the one who can fill the world with sunshine. Do not be followed by its commonplace appearance like so many things. All of our dreams can come true if we have the courage to pursue them. What Disney? What Disney? Walt Disney. It's kind of fun to do the impossible. First think, second believe, third dream, and finally dare. Whenever you do it so well that when people see you do it, they will want to come back and see you do it again. 10,000 years will give you such a crick in the neck, Moses. If you can't say something nice, don't say it. Just keep swimming. Just keep swimming. Swimming. I like this quote because it reminds me of this book called It Ends With Us. Just keep swimming. Just keep swimming. Swimming and swimming. What do? We swim and swim. I don't care what they're going to say. Let the storm rage on. Your code never bought. This part of the Frozen song. For a true hero isn't measured by the Hercules. When you wish upon a star, your dreams come true. I'm gonna choose this one. I feel like I've gone through so many quotes, and this is... You're never too old to be young. It is time. The Lion King, I like that. This one's pretty popular. Hakuna Matata. It means no worries. I'm gonna do that one. Let's do that one. 820. Hakuna Matata. It means no worries. Yesterday's quote was, not wishing nor expecting, she is present. Oh, sorry, not seeking, not expecting, she is present. And welcome all things. So be content with the outcome. I feel like that translates into trading pretty well. I wonder if this 1 minute fair value gap is going to get inversed. And what I mean by that is this one right here. If we're going to inverse it, or will be respected. There is a RTH gap here, but we filled it in, use that. Look, we filled it in, kind of treated it as a support level, and then bounced away from it. Inversion for value gaps here I want to talk about. I don't use inversion fair value gaps as entry models or an entry pattern, but I do use them in confluence with like my trading model. Like if I see a SIBI get disrespected when I'm bullish, then that gives me confidence and more conviction to be able to, you know, actually press that button. Or or like a fair value gap. Let's say there's a inversion right here, and prices, you know, let's say prices does something like we trade up into it, trade a little bit lower, and trade above it. If there's a another fair value gap here that's within that inversion and that fair value gap create a really strong pattern, because we first off we disrespected a opposing PD array, and we created a PD array within that opposing PD array, if that makes sense. It's very strong whenever you see that. And I wonder how many people took that long there, but yeah, like I said, the reason why I didn't take this here is because ES had already taken out the London highs. So that's just something that I do want to keep in mind. I did pretty well on. I should applaud myself for that. That's pretty good. That, you know, recognize that SMT, and I decided that I'm not going to take that model because there was SMT. So sticking with, you know, your trade plan and following it is pretty important. Kagurabachi. Let's see how many people are on the. Let's see how many people are on the live chat right now. Because I actually don't have the live chat put up, so let's see. No chat. Okay, it's fine. All right, we're starting to get some like displacement away here. We had that SMT, and now we are starting to attack that 4-hour low again. So if we can get a candle closure below this busy, I would treat that as an inversion level. So let's see how we trade there. If we can get a 15-minute candle closure below this this little, not little, but this 15-minute fair value gap, then I would treat that as a inversion. So I feel like there's probably some people that took this short here with the idea that there was SMT divergence. So I mean, all this sell side level is not could be taken too. So that's a pretty good model, to be honest. Not too bad. Oh, my back. Jeez. I continue to watch. Yeah, we did not close below the inversion fair value gap. Or we didn't, I mean, not inversion, it's not, it shouldn't be treated as an inversion yet, but yeah, we didn't close below that 15-minute fair value gap, so I'm not going to take that trade setup. Maybe some water. Keep in mind the hard time frame narrative again. I feel like we are just going to be bears today or consolidate today. If we are going to consolidate, I feel like all we're consolidating for is for us to create a daily fair value gap. And we're going to use that daily fair value gap to continue higher. Because monthly wise, I still want to see us expand higher. And weekly wise as well, I still want to see us expand higher. So, just something to keep in mind. Today is simply just us consolidating for us to continue higher, I feel like. ES took that lower already, while NQ hasn't, and YM hasn't yet either. I don't believe we're bears here, or I'm sorry. I can't see us being bears here on the higher time frame at all. There's no fair value gaps to the downside, and like I said, that idea of us just trading lower right now or consolidating for us to set up, you know, the weekly profile for tomorrow, it just seems so clear to me. Like right now, we're only consolidating to continue higher tomorrow. I just want to reiterate that. We're being super patient here today. Super patient. After I do get done eating, I'm gonna go over the pros and cons from last week and some of the improvements I could work on coming to this week. After that, I'll show you guys what the risk management plan I'm gonna choose for today, and then some of the some A+ trade setups or trade models. So let's mark out the SMT here. I don't think we're gonna revisit the knives, to be honest, today. Today could be actually just a really poor price action day, to be honest. We'll see. Okay. So let's go into pros and cons. So I'm gonna finish chewing here. this non-copyright music, bro. It's so bad. All right, so some of the pros that I did last week, or some of the things that I was able to do last week that I thought that were, you know, pretty good, was I was able to utilize all the knowledge that I have, and I was able to formulate a trade I did with that. You know, I used power of 3, I used time frame alignment, I used the idea of breakaway gaps, standard deviations. I used all of those concepts whenever I was in trade, and I feel like that's just one thing that I could continue to do, because it's very, very it helps me be more selective with the trades that I do take. And yeah. Second thing is, whenever I saw prices disrespect a consequent encroachment, so like I said, whenever I say disrespect, I mean we close above it on that respective time frame. So let's say I entered on a 1 minute fair value gap. If I see a 1 minute closure, a 1 minute candle closure above that 1 minute fair value gap consequent encroachment, then I would mitigate my risk. So I'll take off, you know, half of my positions maybe, just to mitigate risk a little bit. And yeah. Third thing and last is I used a new day opening gap as a part of my entry, because that new day opening gap overlapped with day fair value gap. Let me show you guys what I'm talking about here. So this trade was on 8/16, where I used the idea of a new day opening gap overlapping with a fair value gap. So here was the trade, I believe. So I traded this 15-minute fair value gap as a breakaway gap. On the lower time frames, there's a 2-minute fair value gap. So in this 2-minute fair value gap, there is a new day opening gap here. So on the 1 minute time frame, you can see a little bit closer, but yeah, I enter on the new day opening gap that's within the fair value gap. So technically, I'm still trading, or I'm still using the 2-minute fair value gap as a as an entry pattern, but I'm able to reduce my risk just by a little bit by entering on the new day opening gap. And yeah, overall, I believe this trade here was actually pretty good, because we had time frame alignment with the 15-minute, the 1 hour, or 15-minute, 30-minute, and 1 hour. I used the idea of a breakaway gap theory, inversion fair value gaps, and yeah, that's pretty much it. That's really, really solid trade. And it's also at 12 o'clock, right at 12. Okay, so nice. So those were some of the pros, or some of the, you know, some of the good things that I was able to recognize that I did from last week. And some of the, I wouldn't say bad things, but some of the things I could improve on is taking a look at SMT. Like today, I was able to notice that there was SMT between the markets, and then that allowed me to step away and just tape read what actually happens. So like I said, we didn't take out NQ, we didn't take out London highs on NQ, but on ES we did. So I recognize that SMT, right? So from there, I'm like, okay, am I willing to risk any risk on this? No, I'm not. So because I didn't risk anything and I would just tape read, that prevented me from taking any, you know, unnecessary loss. Second thing I can improve on is, it's not really a technical thing, but it's more mental wise. So I could, what I've been doing up to this point so far is, whenever I do take a trade, I tend to try to ignore it as much as possible, because I guess I was still fearful of the outcome. So I would just basically like take the trade, right? And I would just basically kind of just walk away from taking a look what the outcome is. And I guess that's just me coping with, you know, facing the trade head on, and really practicing, me not facing that trade head on, that wasn't me practicing content. You know, I wasn't content with the outcome here. So next time, or this week, I'm actually gonna start working on like physically actually paying attention to my trades, and yeah, managing it, stop loss if we get stopped out, if I take profit, and yeah. And third thing is I do need to keep track of all my trades. There are some like small trades that I do take that I just tend to not journal, because like I don't actually know the reason why I just don't journal them, but I do take like very, very small trades and I don't journal them. So this week I'm going to take very few trades, but I'm going to track every single one of those trades. And yeah, those are my pros and cons. Some of the improvements are here. Some of the improvements I can work on this week are, like I said, number one, pay more attention to SMT. SMT is very crucial. And yeah, I mean, I feel like I'm doing that quite well. Number two, be more selective with my trade setups, and whenever I do take a trade setup, I'm going to be risking heavier size. Number three, to use all the skills in my arsenal to formulate a trade model. So like I said, coming up with a trade model using power of three, time frame alignment, fair value gap theory, and being aligned with the higher time frame narrative or objective, because here the higher time frame objective is pretty clear. So if I can find a model that aligns lower time frame with higher time frame, that gives me more clarity. And fourth one, and this one is a mental thing So like I said, I'm going to face every single trade head on. I'm gonna face the outcome with confidence, conviction, and practice being content. I'm gonna be more aware and more attentive towards that trade and really care for it. Not care for it as in worry too much about the outcome, but care for it as in, you know, actually managing it and not cowardly trying to ignore the outcome. And yeah, those are some of the improvements. Yeah, those are some of the improvements for this week. Some of the next thing I do want to talk to you guys about is risk management. So what's the risk management plan that I'm okay, so what's my risk management plan for today? My risk management plan for today is I am going to be trading normally. I'm not going to de-risk myself here. However, I feel like I should actually, just because I feel like I can anticipate for today to be a consolidational day. But yeah. Okay, so I'll go over the numbers here. So if I were to take a trade today, right, my very first trade, I will be risking 480. If the risk to reward is a 1-to-1, but if the risk to reward is a 1 to 1.5 or higher, then my stop loss would be 720. If the risk to reward, like I said, is a 1 to 1.5 or higher. Second trade, so let's say I win my first trade, right? I make 500. I'll be risking half of the 500 on my second trade, so I'll be risking, technically in this example, I'll be risking 250. And yeah, that's if I win my first trade. But if I lose my first trade, then 240 will be my maximum stop loss if my risk to reward is a 1-to-1. But if it's a 1 to 1.5 or higher, then my risk to reward will be 320. And third trade, same thing. If I win my second trade, I'll risk half of the profits I gained from my second trade. Very clear, very concise, straight to the point. But if I lose my second trade again, right, then 120 will be my maximum stop loss if my risk to reward is a 1-to-1. But if it's a 1 to 1.5 risk to reward or higher, then 160 will be my maximum stop loss. And yeah, those numbers, you guys can screenshot this. I don't really care. I mean, it benefits me. If it can benefit you guys, then why not? Yeah, I'm not going to be taking any models that is below a 1-to-1 risk to reward. So I would never risk $1 to make 50 cents. That's just something I wouldn't do. Next thing is my risk to reward, like my actual position, will be I will set it to where I take my first partial. I would not set my take profit to where I take my last contract off. It will be at the first partial. And whenever I do take a partial, I'm going to be taking off half of the position size whenever I do take my first partial, and then I'm going to move my stops to break even. So my original position size, right, let's just say for example it's 20. At the very first partial, I will take off 10, and then I'm going to move my stops to break even. After I move my stops to break even, I can then later on set standard deviation projections or whatever, and then continue to take off positions, I guess. I'll take off half of the position, so like I continue to take half off. So 20, let's say I have contracts of 20, take off 10, take off 5, take off 3, take off 2, take off 1, and then that's it. And yeah, that's gonna be my risk management plan for today. Trading normal size. Yeah. Let's see what we're doing here on NQ actually. So we closed below that 15-minute fair value gap, so we treated it as a inversion level just now. And it looks like we are starting to sell off, so that's very nice to see. So I do want to see us take out this swing low here. So that's sell side level. That's sell side. I'll mark that out as sell side, and yeah, let's see if we can attack that actually. I feel like this sell side level actually matches up with this it actually matches up with the 1 hour fair value gaps low, so we can rebalance a fair value gap here. In terms of power of 3, or not power of 3, but accumulation, manipulation, distribution, like I said, on the higher time frames we are bullish. So according to higher time frame narrative, we're bullish, but if we're looking at it on the lower time frames just a little bit, accumulation, manipulation, and then distribution. So I do want to see that sell side level get taken out here. We close on this 15-minute candle in about 3 minutes and 30 seconds. So if you can get some sort of model here to attack that sell side level, then it would be great. If we can't, then it's fine as well. Because I can see us taking out retracing back into this new week opening gap here. So I think that's gonna be it for the stream. I was going to say that if we can get some sort of model here to attack the sell side level, but if we can't, then I'm gonna end off streams because it's been an hour and 60 minutes. So yeah, thank you guys so much for watching, and until next time, peace out.